Okay. Good morning. Today is the 20th of April, 2026, 8:15 p.m. And we got a lot of stuff to go over today. So, how are you guys doing today? Everybody get a good weekend and have some rest? Good morning. Got a lot of people in the house starting out. Everybody's here on time. That's fantastic. I love to see it. So let's see who we got in the house. We got Aisha in the house. I know in the house, Lynn, Beverly, Galande. If I mispronounce your name, I'm sorry, but I want to recognize you guys. Uh, I'm old is in the house. SK is in the house. All right. Guys, I always like to start off with a little bit of a recap about, how have we actually been assessing the market. I think that's valuable because it's sort of like doing a retrospective when you're working with companies, right? You do a retrospective, and when you do your retrospective, you learn how to actually do what you're doing a little bit better. So, little couple of minutes in a retrospective on this. So we know that this market just ripped up. And mostly it was in these first days when you had like this rip, that rip, and this rip. Okay. And that's when I came back to you guys and I said, look, okay, we're starting to actually reach the top right now because we're looking at several resistance zones that are actually going to slow this thing down. You had this resistance zone right here and this resistance zone right here. But because we had such incredible momentum, I was also saying you're probably going to pop over that slightly before you come back down. Two reasons I said that. One, because this momentum is so powerful that once it hits a resistance zone like this one right here, it usually isn't going to just stop dead in its tracks. It's going to kind of skid past it. It's kind of like you're running and then you're skidding on gravel or skidding on dirt, right? So you kind of skid past it. But not only that, it's also because they like to play games with the retail traders and they know that a lot of people had stop losses right here. So on a liquidity grab, they love to grab your money and then reverse it as well. So make note of that. When you have those powerful moves like this, whether you're day trading or swing trading or investing, pay attention to that because that's probably what you're looking at. Also, because I said we have these major impulses, like three major impulses, I said, after this, it looks to me like we're probably just going to melt up, which is exactly what we ended up doing. So we nailed all of those predictions. And then the final prediction I thought that we were right on time with was the idea that winners were going to become losers, not so much, but losers, they were actually going to start dumping their money into the losers. And IGV was the king of the ETFs last week. So that's where we're at right now. So let's take a look right now at the let's look right now at the news. Okay, so I prepared it for you, and hopefully I can go through these things a little bit faster. But the Strait of Hormuz, the ceasefire is fracturing. We had some problems over the weekend. Iran, I think, fired on or stopped a couple of cargo ships. Yeah, right here. And, oh, and then the Navy forces fired on a cargo ship in Iran, an Iranian ship in the Gulf as well. And actually, everything seems to be escalating at this time, which is not surprising. Iran's military said they soon retaliate. And then Trump, in a separate statement, said that he was going to destroy all the power plants and bridges, and that he was going to blow up the whole country. Which leads me to something else I wanted to talk about, and I'm going to explain this. It's called the taco trade, and this is something that's becoming very well known on Wall Street, and it's probably the reason why we saw this incredible V-shaped recovery is because everybody, when Trump was talking, like, and I'm not trying to bash the president. This is not a political commentary. This is a commentary about how to trade the economics, how to trade your market when news is coming out, and when the administration actually puts out news like that, it affects the market. Okay. And so we drove the market down, but then all of a sudden news started coming out, and it came out through Twitter and some other sources that we had a deal, and that we were going to be able to continue forward and move into peace and all that. And that's when you saw this. And that was an incredible V-shaped recovery. And it was something that everybody was looking for. And so that's why you saw that. But now, because I think the market's actually beginning to get so used to this hyperbole, this bombastic language, even though oil is actually up like 5%, 6%, I think it was up 7% at one time, your market really isn't down that much. If you look at it, we got a small bear flag right here. And it's just kind of like, I'm beginning to wonder if it's even becoming like the boy who cried wolf kind of thing. And I think that what you need to be careful about is that one of these times it might actually be the real deal. So what I'm trying to do is I'm always trying to actually prepare you for the opposite side situation. Because when it happens, you need to already be thinking to yourself, hey, I got a playbook for that if it happens. So start to prepare yourself if this thing continues to escalate. If they do decide to go for bridges and power plants, to me, that's saying that they're looking to put boots on the ground. That's why you're taking out the bridges and the power plants, and that's a major escalation. Not saying that's going to happen. Right now, the way things have been going, it's once again, it's been bombastic and then retreat. So, is that what happens again? Okay, then that's the playbook. If it goes further, you need to be prepared. I think in this market, you need to be very careful about holding long-term positions, unless you know that that's something you really want to own. Secondly, oil surging, market volatility, it's driving market volatility. These are your stocks, your energy stocks are in play in both directions. Watch 90. It's a key psychological level. A break above 90 invites stagflation talks and rate hikes. All right. We also have a Fed chair hearing on Tuesday, actually, on Tuesday. And I think that's at 10:30 or something like that, but I'll give you that specifically down a little bit further. This could end up turning into some items where there's volatility due to tweets and stuff like that, Truth Social and tweets. Okay, this is a peak week for earnings. 13.2% of the companies will be doing earnings this week. 93 out of 500, the S&P 500. However, it's not really many of the mega cap names. The highlights of the names are right up here, where you got Tesla and United Airlines. ServiceNow, Alvaro did a nice video on ServiceNow. I'll be doing a post on that. IBM, Boeing, Texas Instruments. Okay, all right. Moving down, we got the S&P went from being oversold to overbought in a 12-day succession, and we continue to be bouncing. So be prepared to actually bounce either way. And we'll go through these numbers right here. Those are the specific numbers, but we'll go through those in a second. For the week ahead, I put together this list right here. Once again, this is the beginnings of what I'm creating as the pre-market report, okay? And I'm going to be making this available to you guys. And maybe someday I might charge a couple dollars for it, but the people who get in early will have it for free. So today, there's no major releases, all right? So no major releases on the economic data. The Kevin Warsh hearing is tomorrow at 10 o'clock. ADP employment change and retail sales. This is a labor market read that helps Fed decisions, but then also the consumer health under energy pressure. That will be interesting to see on the retail sales. Same thing with here about rate affordability on pending home sales at 10 o'clock on Tuesday. The reason I'm doing this today is because today is Monday, so let's prepare a little bit for the entire week, not just for today, and that's why I'm doing all of this. But these are the highlights, and you're welcome to take a screenshot of this. Initial jobless claims come out on Thursday. S&P PMI, that's a big number, and that comes out on Thursday as well. And then Friday, the University of Michigan sentiment, that actually does seem to play into things at times. here's your earnings report for today. We have steel is going to be STLD, that's steel demand, energy pass-through costs is what we're looking at on that. It's after the close. Before the open tomorrow, we got RTX, some defensive names. We got industrial and defensive and energy cost commentaries is kind of what we're watching on that. Then you got your airlines and your travel demand and your consumer credit quality are reporting after the close on Tuesday. Before the open, we got defensive production and consumer spending in healthcare. And then the big one, we have Tesla. That's going to be really interesting to see on that, what happens with that. Also, LCRX and TI is a AI spend confirmation. That will be interesting to see. I think ServiceNow actually is a little bit of a play on that AI play as well. IBM has actually moved more towards software, so IBM could possibly actually also be something along those lines. And then you got infrastructure, rails, and travel on Thursday. And then the week's dominant theme is the Iran ceasefire. If there's a lot of volatility, trade smaller. You should try actually reduce your sizing positions. That's something a lot of people don't really think about. If it gets very volatile, you might want to do that. And then you want to be on your levels and don't overstay your positions too long. And I think that's actually great advice for moving into this week and the way the market's trading. So I went ahead and I took this screenshot right before before we actually opened up this meeting. And this basically shows you what's going on right now with the market. And what I'm looking at here is that even though oil is actually up, well, really just energy across the board is up pretty significantly. It's been up, like I said, between 5 and 7% all morning. It hasn't really affected the market that much when you look at it. The market's, the S&P, which has defensive plays in it, so it's going to move maybe less. But the S&P is down only 0.47%. But this is the one that also caught my eye as well. Looking at the NASDAQ and seeing it down 0.43%, that actually tells me something. The NASDAQ's driven by those mega Mag 7 stocks. Is the biggest part of the NASDAQ. And so maybe the Mag 7s, for the most part, have kind of bottomed out. And that might be actually a place, even though we were talking about losers can become winners, there might still be some room to actually go ahead and get into some Mag 7 stocks. The Dow seems to actually be pretty decently strong. We've looked at that several times. And then here's, this was not a surprise to see that the Russell's actually leading the way down. When you look at the VIX is actually up quite a bit. I'm actually showing it at this time, I think up, well, I must be measuring a different VIX. I'm showing 10% on my bonds and DXIY. So it's up 2% on this one, which, that's the futures VIX. So maybe that's the deal on that. And then your bonds, they're slightly down, so not a lot there. Also, not a lot on the dollar. Dollar's slightly up, but nothing drastic. So, and then the other thing is that you do see a pretty decent pullback here on the metals. And so let's pay attention to this relationship right here. This relationship actually seems to be a pretty strong inverse relationship, right, between these two. So the inverse relationship between, the Dow and the S&P, the NASDAQ, even the Russell, Russell has a little bit of an inverse relationship. But so if you're looking at oil and you're trying to say, what are the relationships that it's driving? Precious metals, if oil's up, then more than likely metals in general are down. So that's a look at that. Let's take a look at, we're going to go from here to taking a look at the pre-market heat map and then Max Payne, okay? So I'm trying to keep things up here in order for you. So let's take a look here at the pre-market heat map, get an idea of what is going on here in the pre-market. We're going to take out the noise, okay? You don't need to know what's at 0%. We don't need to know what's at 0.5. Let's look at who are the losers and who are the winners right now. AVGO is actually a loser. One of the reasons why AVGO is a loser is because I just saw something about Marvell is actually signing a contract with Google, or in the process of signing a contract to produce chips for them. And there's some worry that maybe AVGO might lose a little bit of that Google business. So It doesn't seem to be the case, but it might actually give Google a little bit more negotiating power. So AVGO is down. Intel has been a winner. It's been down, or it's down today. And then this whole group here, this group here was actually doing pretty well last week, and that's and they're kind of, not all of them, but a lot of them in this category right here, they're driven by Bitcoin. You look over here, of course, your energy plays are all up, and that's not surprising. Let me turn my my annotation tool up a little bit. I don't know why it always does that. And of course, you know what? Your travel items, they're down somewhat. RCL, CCL, and then we've already talked about the energy. So that's your heat map for today. So that's what's going on with the heat map. And let's take a look at Max Pain, and then we'll jump into the SPY. So Max Pain looks a lot different than it looked last week. When you look at it, there are a lot more calls now stacked into the system. And also the Max Pain, when we also look at that, it's actually running about 685. So it's wanting to push back down into this area right here, which actually does look like it makes a lot of sense to me, that the market maker would like to see it get right into this area where you kind of have your put walls right here and your call walls right here. So if it could get right into this area right here, that's big time money for the market makers. So let's pay attention to that as well. So Max Pain is 685. If we look at it for today, it's actually pretty similar when you look at it even for today. So your put wall is down there at 690. Your call wall is 700. So somewhere between 700 and 690 is where the market maker would love to bring this stock market to. So let's take a look at the charts. We're going over here to the SPY. I already started with the SPY on this 4-hour chart. You can see that we walked up, and in the pre-market right now, we're actually dropped down, and we actually put in this like little mini bear flag right here. If I throw on my indicators to see what we're looking at, like with the moving averages and stuff like that, let's take a look real quick. On the 4-hour time frame chart, we're still on this SPY. We're still actually above the 20-period moving average, all the 20-period and all the higher moving averages. All the moving averages are still sloping upwards. The moving averages are stacked. However, the price has fallen below the 5-period and the 10-period. And if we go ahead and add the moving averages to just see exactly what they're looking like, and then we drive into that. Okay, so you can see here that on my indicator right here, it says the 5-period is actually neutral, and that's exactly what it is. It was trending up, as you can see. It was kind of an uptrend, and the 10-period actually is somewhat, it's still in an uptrend, as you can see, and that's actually what it's showing. That's on the slope, right? So the 5-period is kind of pushing down price, but you have this snapback right here on the 4-hour. That snapback is 704.23, and you guys know those snapbacks are pretty significant. But the other aspect of this is too, and let's do this. Let's go and let's actually show the moving average prices on this indicator, because we don't have to show just the dummy. The moving average as show moving average label as price. Yeah, we already are showing it as price. My mistake. Okay. So that's what I wanted to see. The 20-period moving average is right here, 703.56. Okay, and price is actually right now at 707, but this snapback is at 704.23. So once again, 20-period is at 703.56. This is at 704.25. We have the 20-period moving average doing that pincher play that I've talked to you guys about. It's pushing into what is actually support. And that support at one time looks like it even was somewhat of a resistance if we look at that. Let's draw a line from there. If I draw a line from here to here, yeah, you could see that it kind of was actually somewhat causing a support level at this, or a resistance level at this space right here. And now it's become a support level. So if we're looking at that, and then you're looking at the 20-period moving average, pinching into that as price is actually coming down into that, that actually can turn around to be a little bit of a turnaround play for a scalp. So be watching for that on the 4-hour time frame. We're going to go ahead and we're going to jump down into the 1 hour, and then we'll get some pre-market highs, lows, and a balance range assessments on the 15 minutes. So here we are on the 1 hour. Your levels are, you got 704.23. That was a prior snapback. That's what that green line means. Okay. Had a new snapback right here at, I got to give you that number. That number is 705.36. When there's a lot of overlap, it won't show those bubbles over there. You also have your 50-period moving average on the 1 hour at 705. So you got a lot of confluence coming down here in this 705 area. You have this gap right here, and the gap is actually at the top of the pre-market range, which we'll get into those numbers as we talk. But then you also got a snapback, no, a pivot right here at 708.78 right here. So there's your bottom and your top on the hourly, and then on the 20-period moving average, it's 707.76 on the 20-period moving average. Let's go ahead and take a look now at the 15-minute chart for the SPY. And I think this is the one that actually gives you, for me, I like this chart because I get my pre-market highs and pre-market lows. And you guys know I'm a stickler on the pre-market highs and pre-market lows. First thing I want to do, though, is I want to actually talk about the balance range. So the balance range from yesterday's close, this was the prior day close right here, okay? So this is yesterday's close right here. You see that? And it's marked by that gold line, but I'm going to leave it yellow right here for you to kind of see right there. So that's your prior day close yesterday, right? So we spent a little bit of time over top of that. All of these people were offsides. We gapped down at when the markets opened on Sunday night. We gapped down to that 704.25, and now we've been trading in this range for basically since the gap down. And there we have the gap. So the entire trading range, when you look at it, is this. Now, these people here are offsides. Okay, they're your new money longs, and you have new money longs here too. And that puts downward resistance on anything that bounces back up. However, when we're sitting on the lower end of the range, it's very difficult for the market when it first opens to just run right through that, okay? What ends up happening is you'll have a possibility, maybe it'll go down a little bit and then bounce back up, or you actually go up quite a bit and then bounce down because you have these new money longs putting downward pressure on the price. You understand? That's why we talk about balance range. Now, I explain these balance range to you guys all the time in the pre-market, but I do see a lot of times that the balance range starts to correct itself after 9 o'clock, between 9 o'clock and 9:30. So make those new assessments based on your new information. If I'm looking at this balance range right here, for me, I'm wanting to actually go short, okay? So I'm looking for the short on the SPY and not on the long on the SPY. But on the initial open, I'm thinking that the SPY is actually going to go up. Your first move might be here and then there, or you get a first move that's here and then there. But the problem for me is that if the SPY decides to start going up, I have all of this stuff I have to get through. So it's not a lot of, you try to actually have things to trade when you actually can make a nice run. And so the reason why I don't like to actually look at this from the long side is because there's too much stuff overhead. I'd actually really prefer to have this come back and retest and then take that for my short, or even possibly down to this, to the prior day low down here into this area, right? So that might be more of like, I think that's a better play. So that gets me a little more room to run. However, I should mention though, we do have a gap up above, and gaps actually can fill pretty quickly. So if you're really fast on the button, you could actually play it to a long side on a scalp. Okay, on more of a day trade, I would actually prefer to see the short on this. I also can see that we have a little bit of a trend break right here, and we're looking like we're putting in a little bit of a somewhat of a triangle consolidation here. So watch this consolidation here and mark your levels. Pre-market high, pre-market lows. Let's get those right now, and then I'm going to jump into the lightning round. Pre-market high is 707.7. Pre-market low is 705.01. Prior day low, that's an important number, 705.75. Prior day high, is that a prior day high? No, prior day high is up here, 712.39. Wow, I'd be very surprised to see if we ended up hitting that. Okay, question. Within the first 5 minutes, okay, because I couldn't figure out, some people said we're going to be green at the open. I didn't know if that meant the first candle or the first 5 candles or whatever. In the first 5 minutes, are we going to be green or red? D-May, tell me. And actually, before I get into the lightning round, I'm actually going to do the dashboards. So while I'm waiting for you guys to show me that, and actually, I'll turn up the font size for you guys to be able to see the dashboards even a little bit better, okay? But I do believe the dashboards give you a real good feel for like where is it that you can look to actually make your plays. And I get a lot out of the dashboards, and it seemed like you guys enjoyed the dashboards, and especially now too that we're showing it with the mobile app, showing like what's happening in the last couple of hours. I think that's actually providing some value. So I stopped doing the Zoom thing because apparently that Zoom ended up like stopped showing my my screencast here. We need to maximize, we need to make this bigger so that you guys can see it, but not quite that big. Give me a second here. There we go. That's what we'll do right there. And we'll put this side by side. So there you go. So that's what we're looking at right now. So you guys think we're going to be green? Okay. Okay. Thinking we're going to be green. Very good. All right. So here we are. In the pre-market right now, crude oil is up 5.67%. And I am long crude, so I'm happy about that. I doubled down on it when it went short, I think down 15% or something like that. And I ended up like doubling down, taking some positions off. I'll show you my risk on, risk off strategy some other time. It's up 5.67%. It's just chopping back and forth. It's been between 5 and 7% all morning, so it's just been sitting in there. Natural gas is taking a fall. Bitcoin actually does not like this risk off atmosphere. Your precious metals and Russell, they're down, so that's also not surprising to see. Going to the next one in the list, bonds and the DXI. I don't think there's really too much to see here, except that I really need to figure out why this is actually mine shows 10% versus what they were showing on FinViz. So I'll investigate that for you, but it says that it's actually up 10%. I'm not sure from where it's taken that measurement. Anyhow, but the 10-year is actually going down, and so is the Treasury was actually going down, but now it's flattening out. The 10-year is going down, which means interest rates going up slightly, so that's putting a little bit of effect. Your dollar, it's up a little bit, so it's something to pay attention to, but not anything drastic. All right, go over here to the ETF markets. In the ETF markets, you can see that the QQQ is actually not having a difficulty with this, and neither is the SPY, but IWM and ARKK, so your major risk-on assets, are saying the high volatility, what do they call that? Alpha stocks are actually down, and that's to be expected. So moving on to the next thing, the sectors. We already know what we're going to see in the sectors. XLE is up, and then everything else is just flat to down. Moving on. This is where I think I do start to get some real feel for what's going on with the market. So USO is up. That's actually the play that I'm using for playing oil. XOP is up. XLE is up. And then everything else is pretty much flat. If we look down here at the bottom of the list, let me go ahead and drag this down some more for you. This is where you start to see some interesting things. So yeah, silver's down, Mara's down, IBIT's down, all your metals are down, your IWM's down, and then XLF is down slightly, but I think from about this point here, from about the 1 point response, I think that's where we need to pay attention to. So that's what we need to be thinking about. These guys here, they're all they're reacting to the situation, and the other ones are not reacting. By the way, if you notice here, this is because I was checking it out in the pre-market. Marvell, that's the one that actually signed that deal with Google. So you might want to put that one on your watch list on regards to being a gap up. But that's a side track. So let me just continue now down through the dashboards. Mag 7. Mag 7 is flat to down. NVIDIA was a pretty good winner last week. So it was up. It was up probably about 7% to 8% last week, so it's doing the more of the fallback. Tesla was up 14%. Tesla's actually staying up, so maybe people are thinking going into earnings it's going to be a good play. And Meta actually is one of the ones that's giving back, so that's something to pay attention to. And in the last couple of hours, though, the SPY, look at this, the SPY is actually having a nice dripped up when you're looking at it. And it looks like also Tesla actually had a nice little bounce up right here as well in the last couple hours. So, and NVIDIA had a nice little spike up right here. It was actually kind of somewhat down. Same thing with Meta. Look at this. This all just happened. So these things are happening fast, and that's one of the reasons why I want to be in the pre-markets with you, because that's about as close as you can get to where you know, it's real time to when the market's open. NVIDIA is leading the way as a volume leader. It's well above everybody else with 160 million. Intel is up there with 118. It's just incredible that Intel is just constantly, day in and day out, up at the top of the list. Tesla, that's not surprising. Then you got Plug, CRML, SoFi. Look at these percentage gains for some of these last week. You had 30, and it's probably taking in the percent for today as well. So these aren't exact anymore, but when you look at it, you could get a feel for what happened last week on the small caps, on the ones that have actually dropped the most, the losers becoming the winners, right? And this is what we were talking about. And then if we do this, we go ahead and we go to the gap ups. So there's your high volumes. If you guys need to, snap a screenshot of that. So there's your gap ups or your high volumes, and here's your gap ups. And I'm going to now sort this now by mark percent. And there's your winners. And I don't recognize any of those names except for when it's starting over here with Marvell. So Marvell's, you know, that's been a good stock through the years, I'll tell you. Okta, that one rings a bell. And MP, Ericsson. It looks like the price action is somewhat mixed now in the pre-market, so I would pay attention to that. They had pretty strong weeks last week, so, you know, they've already ran. I would wait for a pullback on them if they're going to actually give you any more upside. So maybe your initial play, if you decided to actually take something on a short, maybe that might be an ability to take it on a short. When you're looking at these plays, if it's in a flag, so I'll just show you this real quick. If it's in a flag pattern like this, you know, you can actually you can look for the short. Obviously, when it goes underneath the flag, you look for the long when it goes up above the flag, and it retests, go up, right? So that's kind of what you look for on these. These are all bull flags probably into the pre-market, and then your gap downs. And after this, I'm going to go ahead and I'm going to do the lightning round. Okay. Gap downs, we're going to sort this now the other direction on Mark, and there's not a lot on this, but you got your American Airlines, and they're reporting earnings, so that's kind of interesting. That might be something to put on the list to keep an eye out for. Cleanscape, JetBlue, okay. So your airlines, your cruise lines, this all stands to reason with crude going up. They're all going to be inversely affected in regards to crude. CCL, we've seen that as well. All of these had huge weeks last week too, so they have the potential to actually give back quite a bit. This is significant. If oil ends up starting, so here's the play, guys, that I'm thinking about. If oil actually significantly moves up, then you put these on your watch list and you watch for them to break zones going down. And this is probably a nice quick scalp short. Okay, so I think that's actually a pretty decent play that comes out of this. So that might be something that we get out of this, and that's one of the reasons why I like to kind of show this. I have to turn my my window now back to I forget what they call it, the look and feel, back to a little bit more reasonable font, because that font actually just doesn't show well when we do the lightning round. So I'm going to go ahead and change this out to the 20 stocks that I actually trade the most. And so I think a lot of those stocks are on your list, and that's why I want to just go straight to the lightning round. What I'm going to show you right here is we're looking at the 1 hour time frame right now. And in the 1 hour time frame, it looks like Apple is actually kind of in this consolidation zone between 269 and 272. It has a nice upward trend. It's the moving averages are all moving upward. A little bit of a flat line on the moving average. It's only down 0.3%. So Apple doesn't look too bad, especially it holds at 269. AMD, you got 281 above, 270. 271.50, 272, snapback, 272 right there. So pay attention to that. We got the 50-period moving average running into that as well. So these stocks don't really look that bad, actually. When you look at Amazon, okay, Amazon, it's a little bit different story. It's kind of somewhat of a downward trend over the last since about Friday, it looks like, and you're in the middle of this range right here between 256 and 244 right here. It's also got a snapback that it's testing right there, right at the bottom of this. And look how clean that is, guys. You can mark that level and you could trade off of that level. So let me give that level to you right now. That level right there is 247.30, okay? 247.30 on Amazon. Breaks below that, it looks like short, okay? Boeing's in between two snapbacks, 218.88, it looks like, 218.88. And then 230 at the high, no, 227.82 at the high. It's just, there's not too much to do in between that range right now. So not much to do with Boeing. Bloom Energy has a snapback here at the 200 level, and that's a psychological level as well. So that actually is a very interesting number. If it breaks down below that, I would think that we could actually get some serious movement down on Bloom Energy. And Bloom Energy is not a stock to be trifled with because it's been in an amazing strongward uptrend. Coin is actually, looks like it's putting in a little bit of a bear flag right here when you look at it, right? So your snapback low is a 194.61, and then it's actually, looks like it's kind of testing this 20-period moving average, and it's not really putting in a lot of strength into this. So Coin actually looks kind of weak right now. It has a lot of overhead resistance. It has a snapback high at 214.84. Going over to GDXJ, this is the derivative that I trade for gold. Reason why is because I like the volatility in it, and I like the price point. So I saw puts against it. I actually sold a put against it already on a snapback low. And so here's your snapback right here. It's bouncing off of the snapback at this time. It has a gap right here that it's looking to fill. It hasn't completely filled. It's partially filled the gap, and it looks like the gap fills around 132. The 20 period's putting a little bit of downward pressure, but that downward pressure just happened. If you look at the 20 period, it actually was more upward, and it just recently has become somewhat downward. So the slope on that is actually now considered neutral, as you can see. So it's really pretty much well, I would call that a little bit of a bear flag right now. So it's a little bit bearish. It has overhead supply. So be careful with that. The play to GDX right now is to the downside, which I won't mind because that means accumulation for me, and I believe in the longer term thing on this, and that's the reason why I sold puts against it in a longer term outlook, like about 60 days. Okay. Just giving you ideas about how I'm trading it. So we got 336.24 on Google for your snapback low. Snapback high, 342.14. You also got a pivot at 340. You also got a It looks like a control bar right here where it broke down, and it's going to honor that control bar. It honored it here and here. So I like that 340 range. That's an area of opportunity right there you might want to pay attention to. So 340 is a range you would pay attention to on Google if you want to trade Google. Hood. Hood had a great week last week, and I told you that a lot of those great week winners would have probably actually give back a little bit. It's giving back a tiny bit. I mean, I think maybe it was up 20% or something last week. So this is not much to give back. 93.32 on the top, 86.4 on the bottom. Meta. In between, and by the way, right in the middle between two snapbacks. No trade right there. Sit on your hands, wait to see which direction is going to win. Same thing with Meta. Look at that. Right in the middle between two snapbacks. Snapbacks are marking your high and your low. 687.77, 676.76. Microsoft. Got somebody asking about Microsoft. So here we go. Microsoft 415.26 is your snapback low. You also got a nice pivot low, and you have a pivot on that same snapback, by the way. But you also got one at 412. You got a pivot high at 431.50. Microsoft is still on the list as one of the IGV winners. So if the market should decide to actually move up, say that it's calling the bluff that this is actually not going to turn into a major escalation and everything's going to continue as normal, then and remember too, there's the idea of like normalizing this war. As long as nothing major or significant is happening and people are just stopping ships and stuff like that in the Gulf, market might just be fine with that. So if that would be what I call normalization of the market, normalizing the news of the day. Netflix had a huge gap down on the earnings, and then it traded sideways. This is actually should go on the list because it's one of these nice tight consolidation ranges. It's going to break out of this pretty soon, and it should give us a good move. Be careful for the first move is the wrong move, where it actually closes up above, but then it actually decides to take you down lower because it was actually a fake out. So be careful about that. If it does take it up above and then all of a sudden it starts dropping down below, get out of that quickly and maybe change your tune. Okay, you can always get back in. Okay, you don't have to continue to hold something just because you believe it was going to go long. Let's say I thought it was going to go up into the gap, and then it ended up, ripping up, and then it pulled back, and then it ended up doing this, and then it pulled back again. I could get out right here, but then if it did that, and then it decided to actually, fake out the shorts and then come back to the longs, I could get right back in again. You don't have to treat your trade like because you bought that trade, you have to stay in it. Take paper cuts, guys. Don't take these major cuts, okay? Don't put a tourniquet on your cut. All right, what are we looking at? NVDA. NVDA is right in the middle of a balance range right now. So NVIDIA was looking a little bit weak when we first started the session, or when I was looking this morning down here, but right now it actually doesn't look too bad. It's got a snapback low here of 198. It's got a snapback high at around 201.50, we'll say 202. We got a lot of reactions in that 202 area. We also have a lot of reactions around this 200 area as well. It's right now just retesting that 200 area. Getting above that would be bullish. If you want to see a breakout above 202, we'd like to see it actually kind of continue to consolidate below 202 and then rip out above. Silver is not looking good. It's a continual walk down. And maybe it's going to throw us together a nice little ABC pattern on this. So watch silver, but above 73, you could actually end up seeing a long. It's in the middle of two snapbacks. We got 73 as a pivot. You got 71.17, 70.5 on the low, 75 on the high. Oracle is 170 on the low, and then the high is 180.7. It's just now getting tested by the 20-period moving average. It's down on the bottom of the balance range. So you can't take this short right out the gate, but it actually looks very weak with a lot of overhead supply right now. Oracle was a major winner last week. Wouldn't be surprised if there was people who actually made money on this last week. And if they see this start to go down, this could drop pretty quickly, okay? Because I think it was up about 25% last week. Tesla Tesla's actually right now it's back down in between the middle of the balance range. It's kind of putting in a little bit of a bear flag in the middle of that balance range, but it actually also has a trading range right underneath of it. So that's when you're really not really paying a lot of attention to a bear flag. You try to find those bear flags when they have opportunity to run. Tesla is not a trade right now. It's too much in the middle. Got to see what happens with Tesla. It needs to get up above 409 or down below 382. Moving over to TSM. TSM's in a very nice tight consolidation range, so TSM might be able to go onto the list. Very nice tight consolidation. That's what I like to see, because that implies that energy is going to bust out in one direction or another significantly, and that's what I like to see. 363 on the bottom, 375.50 on the top, okay? I'll play above 375. You can go long. You can get that up to 386.50. I'll play down below 363.05. You can get that down to 355. And then Visa. Visa looks like it's actually a little bit weak, putting in somewhat of a bear flag right now. And we're looking at 318, 319.50 on the top, and 313.48 down on the bottom. And then USO, here's your snapback on USO, which is 111.35, 110.50 on your pivot. Continually pushing. Also getting some support off that 20-period moving average. Guys, help me out. Look at that chart right there on USO. You think it's going to go higher after the open or lower after the open? We got profit takers or we got squeezers? Which one? Give me an idea. What do you think on USO? While I'm asking you that, okay, do me a favor and make sure that you like the video for me so that I can get some more people on the stream. My subscriber list is actually moving up quite a bit, and I really appreciate everybody for that. We've already gone over a lot of the stocks in the whole lightning round, but not deep into it. So what I want to do is I want to actually use CRM, because that was a request that we did not even touch. And besides that, I'm kind of interested in CRM. I think CRM has some possibilities. So we got a regression channel that I drew on CRM over here on the 4-hour time frame chart when you look at it. So here's my regression channel. Let's clean this up. Let's get rid of the moving averages and everything right now. Let's just look at price action. So there's my regression channel. You now have a little more information. Let me see if it actually changes my view on things. Is that my new regression channel? No, I like this. I like this right there. So it looks to me right now that CRM, when I'm looking at this, I'm thinking to myself, it broke down underneath of that and it's retested this breakout right here. Okay, so that's a back test on a breakout of a daily trend line is what that was. That blue in my coding means that it's a daily. Okay, so blue for daily, orange or gold, we'll call it gold for weekly. Okay, so it's done that, but it's broken now down below the gold, which is actually the weekly. And what's it doing on that? It's actually back testing that the opposite way. So right now I would like to actually see this get back into this regression channel for me to actually want to go long on it. It might imply that if there is some news that ends up actually taking the market down a little bit and you get down below this, that you're probably going to come back and retest this, and I don't know if you're going to hold it or not. Once again, I am still interested in going long on the software stocks, and CRM is on that list as well. But if the market's actually deciding that it wants me to go short, then I'm going to change that tune for a while and go long a little bit later. I don't have to do it today. So here's your pre-market high and your pre-market low right now for CRM. You got 180 down on the bottom. You also got a prior day low around 181. So this is a nice little area right here. If it bounces into this area, to watch and see what the reaction is. Once again, this stock has been beaten down very hard. People are looking to get into it. It's actually changing quite a bit in its character. The moving averages are stacked. Price is above all the moving averages. Your moving averages are somewhat trending up. Somewhat trending up. The 50 and the 200 are neutral at this time. So right now in this balance range for today, we're actually looking at from the close of yesterday, we have new money longs here. So we got overhead supply here, guys. You got to be careful about your overhead supply. We got 184 on a pivot right there. So I would be very careful about going long on this right now. It's got a little bit of work to do to get back into this range right here where it could actually begin to pick up some support off of that there to go long on this. It might actually, just even for today, it might actually be more of a short. So we'll see how this plays out. You got to play price action. And we are at 9 o'clock. So I thank you guys. Everybody have a blessed day. Stay green. Make lots of money. And once again, throw out a like and let people know about this, what we're doing here in the pre-market. Really appreciate you guys. USO is going lower. SK. All right. We'll see. We'll see. I got you on that.